What's up, everybody? Welcome to the Stocks channel. In today's episode, we're gonna take a look at a macro level view of the stock market, and I'm gonna explain why I think the stock market is going into a secular bull market in 2021. Right here on the Stocks channel, we do objective technical analysis and we follow the price action and we listen to what the data tells us. So first up, we're gonna take a look at the S&P 500. So let's crack open this chart and see what's going on in the stock market today. All right, so we are looking at the S&P 500 SPX index here. And we can see we had a really bullish week and we did close at brand new all-time highs. Now, the first thing I want to go over in today's video is as the stock market continues to close at new all-time highs, there will be a lot of emotional investors that think the stock market cannot continue to go higher and they're going to start selling and going into cash. There will also be some people that try to call a top and they will try to short this market and they will become bearish as the stock market continues to head higher. Now, if there's only one thing you take away from this whole entire video today, it's going to be this. Please do not try to short this market just because it is going higher. You will lose a lot of money betting against a bull market. And yes, I do think 2021 is going to be a secular bull market for the stock market. Now, going to cash is always the safest thing you can do if you're starting to get scared of a stock market sell-off. However, I don't let fear drive my investment decisions and I follow the price action and I follow the trends. So if you're interested in that, pay attention to this video and I'm going to explain why I think 2021 is going to be a bull market. There's not going to be any emotion and there's not going to be any fear mongering about news or anything going on in the world that's going to drive my decision making. I'm just going to look at the trends and I'm going to look at the price action. As the stock market continues to go higher, there will be people that sell and there will be people that try to short this market. They're going to constantly look for reasons why the stock market can't go higher and they're going to get fearful and they're going to start exiting. Now, this chart from Macro Charts here shows a great example of exactly what I'm talking about. And if you're interested in following Macro Charts on Twitter, they have great charts like this that give you a great example of some of the things going on in the stock market behind the scenes. So the first thing I want you to know is this line down here represents extreme cash positions in the stock market. We can see today that a lot of people are selling and going to cash, and we can also compare that to how the S&P 500 performs when we see this behavior. So back here, we saw a lot of people going to cash and we saw the S&P 500 start heading higher afterward. And as people started buying in, it was just in time for the top and we saw a huge sell-off. So the people that were selling here were wrong and they really should have been selling up here and then staying in cash as the stock market tanked. And this is why we say retail investors are usually wrong. They usually sell at the bottom and buy in at the top. That's just how it works. The stock market is not easy and it tricks a lot of people. Again, we saw a lot of selling right in time for the bottom and we saw a long bull market that followed. Here we saw a lot of selling and we saw the bull market continue, and then we saw a lot of people selling again at the bottom here and the bull market continued. So we get these situations where people are selling at the bottom and they're missing these runs while they're in cash. So we're now getting a situation where we're at the top and we're seeing a lot of people sell and we're coming out of a bear market that was the fastest bear market in history. So we are seeing a lot of people using hindsight bias saying that we just had a stock market crash, and they're looking at that stock market crash as a reason to expect another stock market crash. Now we're heading to new all-time highs, which is never a bad idea to take some profits, but we are seeing some extreme cash on the sidelines. Now, when there's cash on the sidelines, that means there's only people that can buy in at higher and higher prices. So cash on the sidelines is bullish for the stock market. The more cash we have on the side means the more cash that can be put to work back into the stock market and drive it to higher prices. I would be more concerned if there was no cash on the sidelines because that means the market is starting to get to a top and there's not a whole lot of investors to buy into the market anymore. So the fact that there's a lot of cash on the sidelines is actually very bullish for the stock market. So this type of fear to sell at the top and then wait for a crash is actually adding fuel to the fire. You add into their bears that are trying to short this market that eventually could get short squeezed, and we could even reach a blow off the top situation where the market goes parabolic to the upside and we go way too far, way too fast, and we need to see a sell-off. So I really hope this chart helps you out and helps you understand why I say that cash on the sidelines is bullish for the stock market. So let's go back to the S&P 500 and take a look at the chart. And this is a weekly view of the chart, so each candle does represent 1 week. Don't forget, we just had the shortest bear market ever back in March. And after a bear market, we typically go into a long-term bull market. So we're a little under a year into this bull market, which means it could have a lot more room to run. Now, the first thing I want to bring to your attention is pretend this crash in March never happened. Would anybody have been surprised if the market just went up at this angle here and we were currently trading at the prices we're trading at today and you just completely take out the March crash? This looks like a completely viable option that the stock market could have just continued to climb higher over the last year and just take the fact out that we had a crash. So a lot of people pay attention to this bull market here, but they don't look at the bull market that we had before the obvious world pandemic. So if you take these bull markets and you add them together, you really just get a nice sustainable bull rally, and it doesn't look that abnormal. So there's a lot of emotion in the stock market, and there's a lot of people that only look at what happened recently, but they don't look at where the stock market is coming from. So if you look at the weekly chart and we zoom in here, you can see that we are getting a little overstretched over the 5 EMA, and we did close the week over the Bollinger Band. So there's no doubt that the stock market is getting a little stretched, but there's really not reason to believe that the stock market needs to come down in any significant amount of way before it can continue to head higher. So pay attention to the 5 EMA, because the stock market does like to retrace back to the 5 EMA and find support, and we could retrace all the way back to the 13 EMA and also find support. So going back to the 2016 bull market, where there was a lot of people bearish before the US election, we saw a lot of selling going into the election, and then after the election, everything calmed down. In 2017, we had a really nice bull market. You can see the price action went up, stayed above the 5 EMA, and every now and then when we got a little overbought, we retraced back to the 13 EMA and found support. Sometimes we found support at the 20 simple moving average, and we continued to head higher. Now there will be times in the stock market where we go parabolic like this, and those are those blow off top situations, which will get penalized with another parabolic move to the downside. Right now, it does not look like we're in a blow off top situation. Of course, that's subject to change, and if we keep going up in a straight line like this, we might get a blow off the top situation, but more than likely, we're just going to continue to see the stock market continue to head higher as more and more people position themselves to cash. Eventually, they will put that cash back to work in the market when they realize that the market is not crashing and they're missing out on the opportunity. So there's always the chance we get volatility, and there is a chance that we get something like this where we had the 2018 bear market when the Fed decided that they were going to overshoot and raise rates. Right now, the Fed is not talking about raising rates though, and Jerome Powell has made it very clear that he's willing to keep rates low for another couple of years. Obviously, that's subject to change, so we do need to pay attention to that. But that's what caused the 2018 sell-off, is everybody was scared that Jerome Powell was going to overshoot on the rates and that the stock market was less attractive with a higher rates environment. So don't forget about 2016 and the bull market that followed in 2017. A lot of people were betting against the bull market in 2017, and that betting against the bull market actually fuels the fire and could make the bull market more explosive. So we have a very similar situation here where a lot of people are betting against the bull market, and we're seeing a lot of people position themselves in cash. But looking at the trend and looking at the price action, there's no reason to be bearish on this market or try to sell out. The price action's above the 5 EMA. We have a really strong bullish trend with all of the moving averages stacked to the bull side. You could say we're getting a little stretch to the upside, but that means we could just need a little bit of selling to cool this market down before we continue to head higher. So looking at the technicals and looking at the trends and just looking at the price action, this market is getting a little overbought, no doubt. But that doesn't mean that it needs to have any significant amount of pullback. The market could just need a little bit of a cool off, or it could just go sideways and also correct through time, or we actually could get a blow off the top situation where we start heading up in a parabolic line and then we get a huge sell off to follow. That's just speculation. We need to wait and watch to see what happens, and there is likely that we're going to see a little bit of selling going forward. But that doesn't mean if you're an investor that you need to dump your position, because it's just going to be a short-term sell-off. If we start seeing price action closing on the weekly chart below these moving averages, and we start to see something change in the trend and the price action, obviously that could change everything I'm saying. But there was a lot of people that have been bearish on this market that have been wrong time and time again because they're not willing to follow the price action and follow the trend that's in front of us. So let's also jump over and look at a monthly chart. And we can also see on a monthly chart that we are getting a little overstretched. If December continues at the rate we're at now, we will continue to close above the upper Bollinger Band on a monthly chart. If you look back to 2017, you can see every time the price action got too far over the monthly Bollinger Band, we did close lower. Eventually, we do close above the Bollinger Band and the market cools off, goes sideways. The Bollinger Bands expand and we continue to ride up that upper Bollinger Band. Remember, this is a bull market, so we're going to spend a lot more time near the upper Bollinger Band than we are going to on the lower Bollinger Band. If we get this situation like we had in January 2018 where we close way above the upper Bollinger Band, that's the blow off the top situation, and that's what it looks like on a monthly chart. A blow off the top usually leads to huge selling, and you can see that's exactly what we had after we got that situation. So right now on a monthly chart, it does look like the stock market could use a little bit of selling. So don't expect to see December just continue to climb higher and higher and higher. It could just start going sideways and it could start seeing a little bit of selling, but we're more than likely going to see these Bollinger Bands continue to expand, and we're going to see the market continue to head up at a nice 45-degree angle. So looking at this line I just drew in here, It's possible we see price action just continue to climb higher at this level, and we're gonna see a secular bull market in 2021. Remember, if you take the crash out of March and you just follow this bull trend, it's not that abnormal to think that the stock market could have done this if there was never any bad news or there was never any pandemics. The market loves to overshoot to the upside and then overcorrect to the downside, but it does like to retrace to the mean. And right now we can see it does look like it's getting a little far away from the mean. So on a monthly chart and a weekly chart, it does give you a better macro level view of where the stock market's going. And it does show that we're still in a strong bullish price action and strong bullish trend, even on a macro level view. So the biggest takeaway I want you to get from this episode is don't get too bearish on this market. And if you're going to cash, that's fine. But just remember, if you go to cash, eventually you will have the FOMO of fear of missing out and you will want to buy in higher. Now, I'm not trying to give you FOMO and say, get in now. Hopefully you're already in the market, and this episode is just helping you decide not to sell out of fear. If you're not already in the market and you are in cash, go ahead and just wait for that sell off and wait for that pullback. I always suggest you buy on the dip and don't chase something that's going higher just because you have the fear of missing out. Of course, right here on the Stocks channel, I'll continue to do daily stock market technical analysis for you. So if anything changes with this view, or if anything changes with this bull market theory that I have, you'll be the first to know if you subscribe and follow my channel. So I hope you enjoyed this macro level view of the stock market, and I hope you enjoy the rest of your weekend. I will see you all tomorrow in Monday's episode. Have a great day.